Chris, neutral edge finder, many bullish days in the last few months. I'll be honest, Baniel, I see what you're saying and I understand, but I'm going to be very blunt with you and say that that's not enough to go on a trade. In my opinion, again, it depends how you trade and if you've collected the stats and the data. But yeah, for me, it's just because it's had some bullish days and it's at a resistance. You could say the same for gold. You know, this whole time you could say, oh, it's been bullish for too long, let's sell this resistance, and you've been liquidated. You could say the same here. So yeah, just trying to go off that type of method generally, in my experience, isn't strong enough. I thought you were 17. You know what? I'm 26 and I shaved my beard and I went to the shop the other day to buy a Red Bull and I got ID'd and I was like, you know what? There was a period in my life where that was a bit insulting, but now I'm starting to feel a bit proud of that, which actually kind of makes me sad. I'm getting old. I was unprofitable for 5 years, and after hard work this year, I managed to make 70,000 for a prop firm. That's amazing news, Alex. Well done. Euro Swiss, yeah, I suppose we should probably get back to the charts. This is a trading show at the end of the day. Euro Swiss, I would assume it's going down. Where's Euro Swiss? Here we go. Yeah, so Euro Swiss, again, it's just one of those charts. It's like pound Swiss, it's ugly. I think the Swiss has a lot more reason to be stronger than the euro at the moment. So again, you know, I'm like a broken record, but the euro has performed extremely poorly this year. Oh well, the past couple of weeks really, and they are looking to aggressively cut rates. The data out of the eurozone is pretty bad. So yeah, shorting overall, I think is a good idea. It's more just where would you get into a short here? For me, the way I trade, there is no way to get in. But if you can find a way, then I don't see a problem. By the way, guys, I hope no one's falling for this Eagle 4000 AI. It's a scam. Automated trading doesn't work, and if it does work, you can sell it to institutions for millions. They spend hundreds of thousands, if not millions, on hiring quantitative analysts and programmers and all sorts of stuff to try and make profitable EAs. And if someone can do it from their bedroom and sells it on Twitter or YouTube comments, then it doesn't work, I guarantee. In 12 minutes, there'll be BOC meeting. I say XXX CAD pairs bullish. Yeah, I agree. We shall see. Oh, sorry, guys. I think I've run over my time a little bit here. Got carried away talking to you lovely people. So, guys, have an amazing day. I'm on tomorrow as well, so I shall see you then. And yeah, don't blow your accounts. I'll see you later. Have a good day.
Hey everybody, happy Wednesday. How we doing? I'm just getting a trade up for my Pulver alerts. Going after a price target $1.50 or higher. My limit credit is set at 185. I've got an image to share. There it is. All right, so I'm hopping in a little trade on the SPY. Had a little win on the SPX this morning. I added a covered call to AT&T. There we go. So I just put that in my index trade section for the Pulver alerts. That's a SPY long put. My bad. That'd be different, right? Yeah, I did it. Long put. I did it right. What am I talking about? Okay, so I have a long put going after 575. So this is why I'm taking that trade. My gamma levels are lighting up to the downside. This is SPY. This started at 610. Now it's at 807. So the order flow is starting to fill up, and I'm looking to see if we make a little trickle down towards those levels. A couple of the reasons I would support this move. I mean, it may not fill, right? Or it may not hit my profit, but we are sitting at the weekly lows, and we are trying to breach those lows. If we breach those lows, have a look at the old chart here. If we breach the weekly lows, then it opens up some movement. Let's say we breach this week's low, which we did today. If there's a little bit more pressure to the downside, let's see what happens. But if we breach this week's low, that brings in last week's low. And if we breach that, it's open space back to a little inefficiency here. I may not see price hit 575, okay? But if we get a directional move today, let's say that we go down to like 579 or 578, it may be enough direction to have my 75-cent debit turn into maybe a dollar, maybe $1.10, maybe $1.25. I put in the alert there that if it gets over $1.40 or $1.50, I'm willing to take it. I've got my limit credit set at $1.85. So if I do win on the trade, let's say that I get filled for $1.85. So $1.85 minus the 75 cents I paid for it, I make $1.11. So it's 146% return on capital. Not too bad. So that trade is in. We've got some earnings plays today. $22 on AT&T. I actually threw in a covered call at $21.50. My break even's like $21.95. So if we go higher up on AT&T, I am sacrificing a little bit of profit, but I've got a safe $1,600 locked in right now from shares that I've owned on AT&T for a while. And if they get called away, they get called away. So let's have a look at some other. We had Boeing today with earnings. Boeing was a beat in revenue, a miss on earnings per share. Just a little bit, 0.83% miss on EPS, but revenue was up 0.14. We also had, what else do we have today for earnings? Got to find, where's it at? There it is. So we have AT&T, Coca-Cola, and Tesla aftermarket. IBM. Did I take a trade in IBM? I think I did. Need to change that to green. And I'm going to duplicate. There we go. I want to get this more at the front of my, I've been referencing this every single day. So, all right, let's do a quick spot check. Boeing, AT&T, Coca-Cola. Boeing, I own the shares. Just sitting on those for right now. Coca-Cola, KO. Ooh, had a little dip. My 70 by 71, not looking great. This is out to next Friday. Earnings were decent, but Coca-Cola is dropping. And apparently it wants to drop a little bit more. That's okay. So here's what I'm going to consider on this one. So getting back to $70 might be a tall order right now. This trade was designed to get back above $71. We are risking virtually nothing on this trade, 39 cents per contract for a 61-cent winner. What I might end up doing is we're solid earnings here. Go back to the chart. Coming back into this 200 EMA, what I'm probably going to do is just take the same trade and look at another contract. So if I do two contracts, get filled for 35 to 40 cents debit, if we can get one to win and then we can take the loss on this one, I can make 61 cents on two contracts and lose 39 cents. So let's do the math on that. If I did 61 cents on two contracts, that's $1.22, and we lose 39 cents, I still walk away with $83 profit per contract. So not bad. I like the 200 EMA, and it's coming back in this past resistance. If Coca-Cola gets hit harder, okay, fine. But also another way to play that, rather than doing the debit spread, is maybe setting in a credit spread and then be willing to own some Coca-Cola if it goes lower. So all I need to do is get a credit spread that gives me 39 cents, and then I'm willing to use some buying power to own some shares. Okay. So I may flip this around. Let me see what this is trading for right now. If the IV is actually up a little bit. So Coca-Cola, KO. IV is at 55. Earnings just came out. If I go out to, so for a credit spread, I might look at something, let's say 37 to 58 days out. I don't mind going out 58 days. We've got 250 spreads. Flip this around. If I do a bull put spread, 67.50 by 65, I get 86 cents for a 250 spread. That's garbage. I get $1. This is a little bit better. So I could take this trade out to December, get $1.32 credit. Here's why I would consider this trade. If we lose on this 11-1, if we lose on this 11-1 expiration 70 by 71 bull call spread, which is a debit spread, I'm going to lose 39 cents per contract. So if I were to take this trade, a 70 by 67.50, if this goes lower, I'm still willing to keep the credit and then use my long put to own some shares of Coca-Cola. It's a low beta stock. It's really non-correlated to the S&P. So even if Coca-Cola is going to drop, let's say down to $62, let's say down to $60, I don't know if it's going to drop that much. It might just come back and fill the gap. So I'm going to take a stab at this one right now. It's interesting that the expected move out to December is literally less than $3. That's how low volatility the stock is. So if I get the 67.50 by 65, I'm not happy with 80 cents. Although that 80 cents could make up for the loss, and I'm starting with current price at 67.86, which gives me about a 36-cent head start. This might be the easier trade, but if I'm going to keep the shares, I only want to keep 100 shares and then kind of work my way through the trade. Okay. So let me quickly consider this. Do I like the 81-cent credit? I would basically not take a loss on the trade if I do this. Let me see if I can get filled for 80 cents credit. I like the idea of this one more, but then I'd have to manage the put side. Let's see. How much lower can we go? Fall back into like 66 and then maybe gap fill. Let me see if I can get filled for 83. All right. I like anything over 80 cents looks good to me. Coca-Cola. Yep. So I've got everyone in for those debit spreads. All right. Let me do this. So I'm going to go Coca-Cola. There's my debit spread. Go out to December. I'm going to try to get 82 cents out of this. I'm going to do the 67.50 by 65. If price is falling nicely, I might just close out the long put and then just wait for assignment and then work my cost basis. So I'm going to take this trade for 80 cents, hopefully 81. 82 cents not filling. 81 cents is right below the mid price. Come on, man. 80 cents. Fill to 80 cents. All right, I'm going to put this in everyone's account. 80 cents, here we go. And that will be an easy way to repair the debit spread if we lose on that. If we win on it, great. If we lose on it, no big deal. All right, getting filled for 80 cents on Coca-Cola. I am willing to own the shares to repair this. Even if it's a credit spread that is losing, I'm still going to repair the trade by taking some ownership. And I just want to confirm that I've got all these trades filled. So 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. Good. So those are all in. All right. So I'm putting in that trade there. And I'm going to delete this in my post. I'm going to put this in for the stocks options section in my Pulver alerts in the A1 Trading Discord. Adding in a 12/20 expiration, 67.50, sell put $65, buy put filled for 80 cents credit. And then willing to own shares. So go over here. We're trading right below that, which is fine. I'll put in another kind of long position like so. And all we need price to do is stay above 67.50. So I'll take a screenshot of this and I'm just going to cut out the other trade for that post. But I'll mention in the post that I am trying to repair. If needed, I'm going to repair that trade. So let me go selection, highlight this, copy, and paste. Ah, fudge, I messed that all up, didn't I? So copy, paste. All right, that just looks worse. I'll just do that. Okay, and then put a line here at current price. There we go. That'll do. Okay, so getting this posted. Stock options, this is KO 12/20 expiration. Let me double check that is exactly right. That is correct. 12/20 expiration. Sell the 67.50 put, buy the $65 put, 80 cents credit. KO is gapping lower post earnings. The 39-cent debit spread, if it loses, will be a small loss. So I'm using this trade as a way to repair, as well as potentially own shares if price falls further, and then repair for 1 to 2, let's say $1 to $5 per share profit. All right, so I'm posting that in the Discord right meow. There we go. Screenshot there. And off we go. Okay, so KO having some action there. And then we had another one that I wanted to take a look at this morning. AT&T is up to $22. Boeing is up. Coca-Cola. That's it for kind of this morning wrap for earnings. And then Tesla, IBM is later today. So Tesla after market, we're trading at 216 with earnings coming after market today. And then IBM, which I'm sitting in, we're trading at 233. I'm looking to see if we have a bear put spread. That is a 115 risk for a 250 max profit, which would give me $1.35. We'll see if we have earnings, hit or miss. Also, just technically speaking, if we just have this thing, retracing to a 21 moving average, then that's enough to see this price drift a little bit lower, gap a little bit lower, which would be fine. Okay. All right. So that's that. Let's have a look at everything top down. Forex wise today, I did see that the currency market, the dollar is super strong again. The yen is super weak. The carry trade is still alive and well. It's been something we've talked about for the last couple of months. It just keeps happening. So, I mean, take a look at your currency pairs. Aussie yen still making some fresh highs. The big ripper has been the dollar yen. These are all the levels that I've talked about. I mean, when we were looking at this low, I know I had a lot of traders that were buying, and I said, look, this is a great spot to be buying with a bear trap and a double bottom. If you were long here, it ripped back, and it's been all the way up to all the levels that I've been watching for, with the exception of this 154. We're not that far away. And realistically, I wouldn't be surprised if this thing comes back into like a deep pullback, and we have this like, multi-month range we're going to deal with where the dollar yen comes all the way up here. Then what happens? Well, I'm not calling the top, but I would imagine if we have a nice confirmation candle, there's a chance to sell this thing and then let this dollar yen be resistance and support. Would I buy it right now? I mean, no. You've missed out on probably what, 500 to 600 pips of movement over this last month or so. So I wouldn't chase this thing, but this was initially what we had talked about. I said, watch the bear trap, watch the trend line break. You can either buy that breakout or you buy the low, and you got to retest to that low. And this thing's been ripping since 142. It's up 1,000 pips off those lows. So anyway, yen is getting weaker. Look at it across the board. Yen is getting weaker. Okay, yen is getting weaker. I don't think we're necessarily taking out the highs, but this is also why I didn't want to short and be crazy aggressive on shorting the yen or shorting currency pairs with like shorting the pound yen, right? I don't think we're gonna have yen strength necessarily unless things are getting really bad in the markets, which they don't appear to be, not yet. Okay, Swiss pairs. Swiss is also on the weaker side. Aussie Swiss is just doing its thing. The Bank of Canada just cut rates, so we'll see what's going to happen. They cut rates by 50 basis points. And I took a look, the dollar CAD. So a couple things in this dollar CAD, and this will be a Forex trade that I will also post if I like it. We've got to be mindful of a potential range break here. So I know there's a lot of resistance. I recognize that resistance can certainly hold, and this could pull back, okay? But don't be surprised. This range started back in 2022, right? If we go from 2022 to 2024 and this thing breaks out of these highs and we get above 139.50 or 1.40, I hate to say it, but we're not going to 140 and then coming back to 130. We are probably going to 140 and then going to 145. So if this thing is breaking to the north right now, the Fed, yes, the Fed might cut another 25 and 25, but the Bank of Canada is clearly cutting more aggressively. Canadian economy is not as resilient as the US right now, and it's being reflected in the currency pairs pretty clearly. So I know that it's approaching some resistance. If we have some confirmation to sell, sure, look for confirmation here. But I would definitely have a stop loss above, and wait for a price to do its thing, manipulate those highs. If it rejects off those levels, then you've got a great range trade. But if we break these highs, I think we go to 145, and it's pretty simple. I just measure. Okay, I just measure this range right here. So from basically, well, we'll go conservative here. Let's just go from low to high. Let's measure that range right there. Okay. And so if we break out, I just stack that on top, and that would be my symmetry on the dollar CAD. And I'm looking at something around 44.90. That's why I said 4,500. So if we get to 44, 44.50, 4,500, that is a wide open space to be long dollar CAD. Right now, does that mean I want to get long right now? No, because if we reject, then there's resistance to trade, and we can sell this high, and that's a great trade. But my point is, this has been in a multi-year range, and I know that this gets traders all excited to see like, oh, it's going to be a sell. This is going to be a sell trade. Well, if this thing breaks out, we're probably going measured move up to 44, 44.50. So that could be my next kind of open trade on Forex, which is I'll just stack in some orders here and see if we make that run. I mean, if I want to keep this really, really simple, I could put in a buy trade at 4,000 and put a stop loss in around 39 and just stack up orders at 41, 42, 43 and just let this thing go to 44 and 44.50. And if I'm right, price will get there. If I'm wrong, it shouldn't be too noisy. Okay. So I'm going to keep an eye on the dollar CAD, but this is one that is testing resistance. So I want to be mindful of that. My dollar Swiss continues to look pretty good. I'm trying to hold out this one towards 9,200. DXY, again, no signs of stopping. So it's crazy how this dollar's been moving. We've had, such chop, and then it finally moved. It wasn't reflecting on every currency pair. The euro dollar moved nicely, but everything else was garbage. And the dollar now has just been like straight strength, and it's been pretty straightforward, like Aussie dollar straight down, New Zealand dollar straight down, dollar CAD straight up, euro dollar straight down. And I'm not calling the top here. I'd love to see the dollar get weaker, right? If the dollar gets weaker, where? I mean, we could turn at any point, but if we end up coming back into this resistance, or we end up finding some of these highs and running some of these highs, then 106 to 107, okay, fine. We get there and we reject, or we get there and then we reject. I'd be looking for topping formations and resistance levels to hold. That's my logical spot. Until then, I would go down to a smaller time frame. You can take this to a 1 hour chart. Is there any reason to sell this dollar index right now? Not at all. This thing has been super well supported off those bear traps we talked about for weeks and weeks and weeks. And then when it finally started to show, it's breaking all the structure, getting out here, this thing has been nonstop. So it's been a steady like October run on the dollar, and crazy, right? What's going on with the pound? It's been selling like crazy. Has it been? I mean, I see it up here at the top. I mean, what's pound what? Are you talking about pound dollar? Because that's selling because the dollar's been stronger, right? But I'm sure not every currency pair is just all pound weakness. I did have a chart alarm go off on euro pound, but that was pound strength, right? Euro is weaker than the pound. Pound is sitting here at 83.20, which, by the way, isn't a bad spot to be looking for support. So I don't mind this trade here. In fact, I'm going to take this trade. All right. I'm going to go, what's the interest rate situation here? CB rates. UK is at 5%. Eurozone is cut into the threes. We're at 3.25. Well, I kind of like that trade less for negative carry. Technically speaking, though, this goes back to 2019. This goes back to 2016. I suppose my stop loss would be around 82. So what I'm thinking is this: if I did a buy at 83.20, a buy at 82, let's say 82.15, and then a stop loss around 81.75. So if I can get any type of reaction here or here, I'm just looking to see if price will bounce and hold like it has been for the last 4 or 5 years. There's a lot of support in here. If price holds and holds, I think that's a pretty good trade. So let me figure out how I want to price that out for a buy trade on my trade alerts. But it's probably going to be like a 2-entry, maybe a 2-entry position trade for euro pound. DXY spot 104. Yeah, I've got 104.50 actually. You're talking about futures 103.80 for December. Yeah. Okay. We'll see if it gets there. Oil 70.82. Let me get rid of some of my moving averages. I'll pull these up later. So 70.85 right now. Crude oil is still hanging out, just bouncing off these lows. I don't like support. I think this is another floor that could potentially break. Natural gas, I want to see if this will come a little bit lower, and I'm looking out to April, May for some futures contracts. Gold at 27.17. Dollars up, so it makes sense that the gold is pulling back. This is totally fine. Okay, another one that I'm waiting to see, can we pull back to something, right? Look, even this little pullback here, this shows how strong this trend is. Testing the 21, testing the 21 and the 50, testing the 21 and the 50, testing the 21, testing the 21. That is a sign of a very healthy trend. With today's candle, if we do the same thing and test the 21 or test the 50, I'm probably looking at, another opportunity to get long on gold. I didn't get anything in here. I was hoping we'd come back to at least the 50 period. We didn't. We hit the 21 and then ripped higher. So kind of the same thing. I'll watch for the 21. I'll watch for the 50. Probably put in another credit spread on GC, another credit spread on GLD, maybe even dollar cost average into GLD a little bit because I have some shares of that, and then there's no time factor I have to worry about. But same thing, the 21, the 50, I'll be watching those levels closely. Silver also pulling back. Silver futures also pulling back, which is fine. Pulling back is fine. Gap filling is fine. I'll see what happens. Bitcoin at 66 also pulling back. So IBIT rejecting off the highs a little bit. Bitcoin is still, not able to break these highs yet. I was looking at an email that seemed pretty interesting. This is from Toggle. This is like kind of an AI dashboard. Let's see here. Kamala's odds have reached record lows. This gives us a cool trade idea. Bet on Kamala winning 2.6 times payout by a 1 week 1-to-1 call spread. Oh, that's for like the is anybody like, that people are like betting on election stuff now? It's pretty crazy. The source is Betfair. Betting on Kamala for a 2.6 times gain seems like a convenient, cheap way to buy protection. Anyway, I mean, it's crazy. You can pretty much bet, invest, gamble on whatever you want nowadays. But of course, if you have a gambling problem, contact your local Gamblers Anonymous. If Kamala comes historical response from the S&P following a Democrat becoming U.S. president. 1 week, 2 weeks, 1 month, 3 months, 6 months. I mean, the average move 3 to 6 months after is 6 to 11%. Earnings beat amid global slowdown. That's what we got with Coca-Cola. If I had the gap lower, Coca-Cola reported stronger than expected quarterly earnings and revenue driven by higher prices despite sluggish demand. Company posted adjusted earnings surpassing the 74 cents. While unit case volume dropped 1%, particularly in international markets like China and Turkey, Coca-Cola's organic revenue rose 9%, reflecting its resilience. Company raised prices by 10%, partly due to inflation in key markets such as Argentina. Despite these challenges, Coca-Cola remains optimistic, projecting 10% organic revenue growth for 2024. Well, I just like the trade that I got in for Coca-Cola then. How's that? All right. So Bitcoin, that's where we're at. Still watching that resistance level. James, that's interesting. James says Trump 26-1. Is that you're talking like 2016? Is that back in the day? I mean, the polls I'm seeing now, I'm seeing him like edging higher, like 54 to 56% probability of winning now. The one thing that was a little nerve-wracking this week was reading that there's a potential 41% chance of a Republican sweep, which would be Congress, so like Senate, House, and President are all Republican. That would be, I think that'd be the most disruptive thing to the markets. I don't know if it's good or bad. I really don't. I think either way, both administrations are going to spend money. So there's going to be fiscal spending. But if we go hard on tariffs, that's inflationary, obviously. We put more friction in the global economy. That's inflationary, obviously. That does make the Fed's job a lot harder. And I don't know. The Fed ultimately could break something where if inflation gets higher, hotter, sticky above 3%, 3.5% again, then we might just keep pausing. But I also wonder if we cut November, cut December, cut January, and then inflation starts getting a little bit higher in 2025, that the Fed is at least pausing, but also like, fudge, man, we might have to raise rates again. And it's just the seesaw of what their policy is. Like they're raising rates like crazy. They're cutting rates now aggressively. Everyone's now faulting the Fed for cutting too much in September. They can't win. That's pretty much the answer. They can't win. MicroStrategy at 221. We have earnings on MicroStrategy coming up next week, I believe. I do want to take a look at some earnings on MicroStrategy. I'd love to see a gap lower in any way, shape, or form. Otherwise, all these income trades are looking good. I'll see how it's priced out. I think it's pretty cheap. I looked at this yesterday. It's pretty cheap just to buy, buy a bull call spread. It's pretty cheap, but I don't know if that's the trade. So, because I think I priced this out yesterday during my 3 p.m. session. I looked at a bull call spread that was like $1.50 or $1.70 to make $3.30, which is pretty good reward to risk. But on the put side, you'd have to go like $30 to $40 out of the money in order to get the same price. So the put side was just way more expensive. Anyway, crazy stuff. Copper, no trade right now. Japanese, oh my gosh, man, the Japanese yen future is just getting beat like crazy. This is nuts. You got to wonder what happens here. With this Japanese yen futures, if we go low and high, I mean, are we going to have any type of balance in this market, or is this just like, oh, congratulations, you deleverage and then you're back up to getting levered back up and the carry trade is on until we retest this low? I have no idea. But talk about this. This is also the proof that I hate the Japanese yen. It's like, I know traders have been then long the yen and getting some profit out of it. That's great. I just hate the yen so much. So I'll just stop talking about it. The Nikkei hasn't done much. FXY, I'm long FXY, and that's that was great while it lasted, but I'm actually hedged on this through 2026. DAX is Germany's market. We're sitting near all-time highs. FTSE's UK still the perfect strangle. I want to trade this one so bad. HSI is down 0.28%. EWZ is Brazil. Apple sitting near all-time highs with earnings. We have Mag 7 earnings next week. Okay, earnings is the 31st on Apple. Earnings is the 31st on Amazon. Earnings the 29th on Google. Okay, earnings on Meta also next week. So Mag 7, this is a wild couple of weeks. I mean, think about this. You've got Mag 7 with how many trillions of dollars in market cap? You're going to have somewhere between like $5 and $6 trillion worth of market cap, maybe more, with just Mag 7 earnings next week. Microsoft earnings next week. Netflix already had earnings. They popped up higher. We had some money on that bull call spread. Nvidia doesn't have earnings until November. Tesla has earnings today after market. We've got the bond market down. Yields are up again. The 10-year is just continuing to rip to the upside. This stupid piece of crap. Yields are disinverting further, and the mortgage rate continues to hold from that 608 bottom to 6.44. I'm very curious to see what this looks like coming into Q1 of next year. IWM versus Russell, or I'm sorry, IWM is Russell versus the Nasdaq. Watching this one closely. Got some currency futures, have some regular futures. This is something I'm watching. This is JNK. This is Bloomberg high yield bonds. So your AAA versus BBB versus CCC. If this heads lower, this is kind of it's tended to be a bit of a leading indicator for me. If this is heading lower, then we tend to see some pressure in the market to drop. So I don't like where this is going right now. We obviously could have a lot of points of stability here, but if we have like a big ugly drop, we might see some selling in the market. So I'm going to hold by just the short-term income plays. I got some calendar spreads. I got some broke wing butterflies. I got some hedges. My ES and my MES trades are hedged out through the election. And then our China plays this week. BABA is down 2%. Baidu's down another 2%. FXI flat. KWeb hanging in there, but down less than 1%. JD's okay, but I've got this one. I'm trying to repair this one out to next Friday for $42. That's the covered call. I don't mind like rolling this again. I mean, I've got 500 shares. If I can roll it and roll it and roll it, I might end up making, you know, 7, 8, 900 bucks. I'd love to make over $1,000 an account for this one and just have it be a nice income trade, but it's going to take some work because price, if it's going to be falling, I got to be trailing and trapping my covered calls and getting closer to price. So right now I'm at 42 with the stock price at 40.24. If it goes lower, then I'll move my strike prices lower. I'll get some credits out of it, and I'll just keep working the cost basis down. So anyway, that is that. What other charts you want to take a look at today? Any other requests? I just did like rapid fire on currencies and stocks. We've got some more earnings. I think everyone's watching to see what Tesla's going to do today. I'm looking to see what the SPY does. We're sitting here revisiting, you know, the daily low. If we get a little bit more directional, we break today's low. That's a fresh breach of the weekly lows. And let's see if we actually gun for last week's low. I will say this on the trade that I took today on the SPY with a 575. If directionally today we were actually down towards last week's lows, that would put me around 579 to 578 and change. That is enough of a movement today to get like a $3 or $4 move. I might just take profit on the trade, right? Rather, I mean, I could go to break even on it. But if we get a directional move and I can turn a 75-cent trade into, let's say, $1.25 or $1.40 or better, I'm probably going to take the profit and just move on. Okay. All right. And let me open up my platform again. HWM, Aussie CAD. Sure. Yep. NQ. What'd you do today, Daniel? What'd you do today on your NQ? You crush your NQ today? Or is it just like a bounce off the lows? I just saw the support level. Or were you trading early? You usually don't trade till like 9:30, right? So what was your trade today? Anything? I mean, I know you're trading like 1-minute charts, 1-second charts. What do you trade? I know you're crazy active. We're about look, I have this low from yesterday on NQ. And yeah, I mean the support seems to be holding for right now. Here's the floor on the ES. I mean, all these levels. So support, here's support. I mean, if we breach those lows, and it might not happen during trading hours. It might be like post market, we might break and breach and go lower. I don't know. But we'll find out. All right, let me grab a few more requests. Log in. Give me 1 second here. Okay. Dynamic. There we go. Okay, nice, man. 579 bucks. Killing it as usual. Aussie CAD. Yep, let's take a look at Aussie CAD. So Aussie CAD. I'm currently just holding long on Aussie CAD. Daily charts really well supported on these 200 EMA dips. So if we have, you know, back below, back above, back below, back above, testing it again, back below, back above, I'm trying to hold long. My direction is long Aussie CAD until we hit 94.95. 9,400 to 9,500 is my profit zone. So I've been building since this low. I've been building since this trend line break. Added a couple trades over here. So I'm holding for this to get me paid above 9,400. So that's my Aussie CAD. I'm trying to look for this thing to just, you know, pull back in, find some dips, head back higher. If it hits 94, I'll probably take profit. Pulls back again, hits 95. That's fine. Either one. I'm looking for that area for profit. Oh, you started at 832. Okay, gotcha. So did you start early today then? Or are you usually trading at 8:30? I thought you said 9:32 in the Discord. What else? Who mentioned a couple stocks? We have HWM, aerospace. I mean, this is the same thing as Lockheed Martin or Raytheon to me. I just want to see pullbacks. We have earnings on the 6th of November. So, I mean, these defensive plays and aerospace plays have been just going bananas. I'm not chasing this crap. You know, I mean, I'd like to see a pullback that just let's find some common dynamic support. We pull back to the 50 or the 100. You know, this is a nice structure area here. A little pullback goes a long ways. Just give me something to participate on a discount. I'm just not buying highs. So a little pullback helps. A little pullback goes a long way. And as they say, a little dabble do you. So I'd like to see a pullback on that one. But yeah, you can look at, how Met compared to its competitors, and you're pretty much looking at all these aerospace defensive stocks. They're all up. Lockheed Martin at all-time highs, Raytheon at all-time highs, right? I mean, look at Lockheed Martin missing revenue. It's down. Frank and I talked about this one on Monday, and it did exactly that. It actually dipped post earnings, but I didn't take the trade. I don't know what it would have been if I did a bear put spread. I don't know if it was cheap enough to take. So I didn't take a trade. But either way, I mean, if you look at what this stock does, I mean, that's a crazy aggressive move from July this year to now. That's a lot of direction without any pullback. So it makes sense we're getting some type of pullback. I would look to see if we, settle in and then close back above a 50, that we can maybe start participating for higher highs again. Otherwise, what goes up aggressively and inefficiently comes back down to rebalance. And then we'll find some support maybe at this like 100 or 200 EMA. Okay. All right. So did Aussie CAD, did HWM, NQ, Aussie Swiss. I looked at Aussie Swiss. I'm still long in Aussie Swiss for some positive swap. My Aussie Swiss target is going to be up at the top of this yellow box. Resistance up here. There's symmetry measured up to 6,000 is fine. 6,000 is an acceptable price target. 60, 50 would be my measured move. Yep. Okay. Euro Aussie. You're calling this one. It was a good opportunity to buy at equal lows. Right now, it looks like we have maybe this in the works. We're off of support. Off support, we go up. We pull back a little bit. If you get another breakout, we could see the Euro Aussie, range back up in these highs around 6,600. So it seems to be a range that's acceptable. That's a bit of an outlier high, but from 6,000 to 6,600, I could see this being a range trade. Okay. SPY, what does Edgefield tell you about the gap fill? Let me take a look. So SPY gap fill, I'm going to go out for the last 5 years. I like to go out to more data. And today, so gap fill on the SPY. First off, let's check the size of the gap. So here we had a gap of, we opened, so we had a gap of around 0.36%. So 0.36%. We do have a 72% chance by the size of that gap that we could fill it. Now, that's supposed to be filled within the same day. Now, that's a 28% chance it doesn't get filled. And, I don't know. I mean, look at yesterday. So yesterday we had a gap fill. There was your high, your open. So there's your gap, and price spent all day until it finally filled. So today's price action, if we don't breach this low and we bounce here, this market might do the same thing and fill today's gap. And there's your 72% probability. Okay. I'm just looking at this from the structure side of this has been a quiet week of trading with a tight trading range. If we breach this low, I think there's room to go lower. And guess what? If it doesn't get filled today, I'm still thinking this gap gets filled sooner rather than later. So yes, we might have a decline, but this gap is going to be something that the market can absolutely go after later on. So I'm watching the floor today. That's really what I'm paying attention to. Okay, by weekday, let's take a look and see how it fills on weekdays. If we gap down on Wednesday, that's a 67% chance we get filled. But I think by size is what I watch the most. I mean, 0.36 isn't a huge gap compared to like the one percenters. Those are big gaps that usually don't get filled. Anytime you have a gap over 1%, it's only about a 35% chance it gets filled on a gap down, and a 20% chance it gets filled on a gap up. So that's what's kind of crazy good about big gaps in the market is it's rare they get filled. But in those less than 0.5%, less than 0.4%, they get filled most of the time. So yeah, that's where we're at today. Watching the floor. Let me see. I'm going to move this chart alarm up to here. So 580. I'm just going to put a chart alarm at 580. 580. And Chandler, fellas, do I need to go? Is Nick coming on? If so, I can wrap things up here. Let me know in the chat. Is SPX good for short? I have some hedges on the SPX. I basically just trade. Okay, no. Okay, cool. The SPX I usually trade daily for a little SPX daily income. And other than that, I use a lot of butterflies, a lot of broken wing butterflies. If I'm going to short just the index, I typically look at the SPY. I can buy puts on the SPY. I'll do hedges on the micro futures, so MES and ES. So this week in the Pulver alerts, I put in a broken wing butterfly on ES, and I put in a long put on MES, and those are out for like election hedges just in case things go south. So if they don't, I'm willing to hedge it as things, maybe go higher. I offset those costs by my portfolio going higher. But I think it's a necessary evil right now just to make sure that I'm protected, and I'm not really looking at hedging as income plays. I'm looking at hedging as just pure protection. Okay. All right. I'll do a couple more here. I see euro dollar request. Euro dollar, I mean, it's the inverse of the dollar index, right? So, I mean, if I had a great trade on the euro dollar, it would be I'd love to buy this thing at 106 and just buy it and not even worry about it. You know, I think we've got some pretty good range structure in here. So if we come back down to 106, I like this zone a lot, and then pull back into halfway or all the way back up. We'll see what the dollar index does. So yeah, I mean, until this thing turns, I mean, go to the 1 hour chart. There's no sign of bullishness yet. And I mentioned this last week, right? I had mentioned, I think when I did that little top strategy session with Nick, or I hosted for like an hour and 40 minutes. Look, this pocket is a great trade that will eventually get filled. The only issue that I have with it is there's no sign of this price action suggesting that we are going up right now. So as juicy as this profit target looks, as long as we keep going lower and lower and lower and lower, I'm just going to wait. But if we come into this 106 area, that's the spot that I'm looking to see if we can base and then start to work our way up, get above these trend lines on the smaller time frames, and then work our way back up to find that efficiency. So to me, that's a gap. And I think we get there, but if I look at it on the higher time frame, I really like to see the daily, right? Let's try to find a really key level of support. And I had mentioned that maybe this is good enough, right? But that is the equivalent of saying that, oh, the dollar index is going to also form a top right now. Doesn't seem like it wants to. So I don't like calling the bottom right there in the euro dollar without confirmation. So if this goes lower, then I'm going to get rid of that line that I just drew. This goes lower, that's fine. But in this area, way more interested. That would be a 600 pip drop. And if we have support, we keep the stop loss relatively tight and we have a move back into like 109 or 110. But will the dollar give us that confirmation? We'll find out. Okay. All right. W pattern on the NQ. Where at? Is it this? That W pattern? I mean, this is just kind of drifting right now. I do wonder what the oh, you're looking smaller time frame, right? Yeah. I was talking about this on the NQ or the Nasdaq, which would be, we had that high to low. A lot of people said when this crash happened in August, a lot of people were like, "Oh, the top is in. We're not going to find the highs." Well, they were clearly wrong. Like Nasdaq hasn't found the highs yet, but the SPY did multiple times. We have 47 all-time highs for the year. The Dow did as well. Nasdaq, making its way up, making its way up, making its way up. Is it possible that this hits these equal highs and blows that out, or is it hit the equal highs and then range? I don't know. Okay. I don't know. But this is what is all coming in the next couple of months. We're going to find out whether this market is truly in melt up capitulation territory to just more all-time highs, or this market has seen its highs and it's going to be difficult to breach them once again. Right. So we'll watch. I'm watching highs. Dow pulling back off the highs, SPY pulling back off the highs, Russell a little bit more volatile. It's funny how the Russell was outperforming indexes last week, and that was the weakest one. It's very sensitive. Poor little guy. Right. And then Tesla, yep, we talked about Tesla. There's earnings coming today after market. So I'm curious what Tesla does. Realistically, if Tesla goes higher, then there's probably an easy trade right there out to November for profit. If Tesla goes lower, I'd already said this on the trade. If Tesla goes lower aggressively, I'm going to use my 220 put and I'm going to own some shares and I'm going to repair those things for $5 or $10 a share and make 500 to $1,000. So if it goes lower, I'm kind of excited for that. I want to own Tesla lower. But if it goes higher and we get a gap fill towards 240 or so, then this trade becomes profitable pretty quickly, and we can take, let's say $1.30 debit and take 50% of the profit. Or if you want to wait on it through November, then you can take your chances and try to get full credit by expiration. But earnings coming out today after market. Okay, that being said, I'll wrap it up here. Look, watch the lows for the week. That's probably the most important thing right now. I've got to trade on to the SPY 575 long put. If we break the lows and we breach or we come down to last week's lows, if that happens today, if we're coming down to the last week's low today, meaning we get a more directional push and we break the lows again, I'm probably going to take that 575 put and close it out for profit today. Why? Because if it's happening fast enough directionally, I still have some time premium until Friday that I don't necessarily want to hang on to. Now I could, but if I get 75-cent debit turns it into a $1.10, $1.15, $1.20, I might just take the profit and move on. Okay. All right. So that being said, I think I'm good for the morning and back at it tomorrow. All right. Thanks, everybody. Have a good rest of the day. Thanks, team. See ya. Bye.
Thank you for watching today's A1 trading show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.